Welcome back. You're watching World Talks, and I'm your host, Klaudia Czerwińska. The International Monetary Fund has slashed its growth forecast for most of the developed economies, with the organization's chief economist saying there is a significant downgrade to global growth. April 2025's World Economic Outlook was certainly awaited by industries and policy experts. What are the findings and how will they affect the global economy? Now, these are the questions for my next guest, Bernhard Otterstein, president at the Polish-Canadian Chamber of Commerce. It's great to have you on the program. Thank you for joining.
Good to be here again. Thank you.
So the IMF has revised the global growth down to 2.8% for 2025, citing the U.S. trade war as one of the key drivers. How severe do you think this downgrade is in a historical context?
I think that it needs to be put into perspective so that while, it shows about a 0.5 percentage point average decrease in many countries, it is really just an adjustment, and the severity of it still needs to be judged. There are several factors that will influence the growth rate, and one is certainly economic instability caused by new trade and other counter-trade measures, and tariff and other counter-trade measures, and on the other hand, it's also the relative instability and uncertainty about how things are going to go forward. Mm-hmm. So that will have an influence on economic activity, on the stability of financial markets and other factors that are needed to assure that the economies are able to function properly and mm-hmm. grow.
So the term of a trade war because of the U.S. Imposed tariffs is being thrown around, and I wonder to what extent these tariffs and them happening at that particular moment in time actually had something to do with what we're finding from the IMF.
I think that what we're finding from the IMF is that there are certain perceptions globally that there are imbalances in the system, that there are gaps, and that some things have not been working the way they should. And I think that's what the Trump administration is definitely saying, and therefore taking measures to try to correct those gaps or those imperfections. That said, any change in the markets that takes away the predictability of how things are going to move forward will cause uncertainty, and that automatically creates higher risk, and also brings into question what the economic growth will be in a given year.
From your perspective, to what extent do you agree with the premise showcased by the IMF that the global economy is undergoing a complete reset? And how severe of a consequence is that reset going to bring to the global market?
If we're talking about a complete reset, none of us know what exactly that would mean and what consequences it would have. A complete reset is something we haven't seen for many, many decades. And I think that... Quite
a scary perspective as well.
Yes, it certainly could be. But whether or not that's going to happen, we don't know yet. What we do know is that changes are coming. Changes are happening. And therefore the risk moving forward has increased. And that always will have an effect on financial markets and on people's economic activity and their willingness to do things.
Mm-hmm. So global trade is expected to grow at only half the previous forecasted pace. What does this mean for economies that are heavily reliant on this branch of economy?
Well, it's not actually half of the economic growth. It's a 0.5 percentage point less, which is not dramatic, I would say. Countries that are affected are the ones that export perhaps materials or components that become parts of other products, and in that sense, and then the countries that produce the final products again are affected. So it's a chain of effects that could happen, and if we're talking about higher tariffs, for example, to the United States or to other countries, that's where there could be cumulative effects across supply chains. But actually at this time we don't yet know what the tariffs will be, which countries will have them in place, which ones won't, which new or expanded trade alliances or free trade alliances may arise, and so forth. So I think it's too early to tell what the effects will be, but there certainly could be effects in some countries that are really dependent on free trade.
When do you think we're going to find out? I know it's a continuous process, and those things are going to unravel themselves in time to come. But us, as for example, customers, consumers, when are we going to see some change take place? When could we feel that, especially when it comes to our pockets?
There's always a certain lag time in these issues, but I think that what we could see in the short term, as the United States and China enter what I think could already be called a trade war, at least at this point, is that more Chinese goods could be channeled to other countries. That could see a reduction in prices of products for Chinese products, but the longer term effects of that could also be negative to countries that import more, because then their own manufacturing will suffer, and less people will have work and that kind of thing. So it's too early to predict again, but I think that the effects could be positive on the one hand in terms of lower prices, but also the opposite could happen as supply chain disruptions cause higher prices in certain countries, such as the United States.
We obviously know that the new U.S., not so new, U.S. administration imposed the tariffs, which hit the global market. But to what extent do you think, and which side of this whole debacle is actually to be affected the most when it comes to those tariffs and to those predictions? The U.S., the Eurozone, China?
I think that the United States will see higher inflationary pressures due to supply chains being interrupted or disrupted. China, on the other hand, will see a lower demand for its products. So the United States will have more inflationary pressure, China will have less. And the European Union is probably somewhere in between, because it's anyone's guess right now exactly what will happen, what the outcome of the announced negotiations between the US and the EU will be, for example, during this 90-day grace period before the higher tariffs kick in.
And as we look at the world economic outlook again, how is Poland doing in comparison to other places?
I think arguably Poland is relatively protected from a lot of these changes.
Why so?
It has quite a diversified economy. It has a diversified network of trading partners. And in that sense, its output and its exports are dependent upon the further re-exports of some of its trading partners, such as Germany. And that poses a certain risk. But I think that the diversification and also Poland's strong internal market are factors, for example, that will lessen the impact directly. And there are also other things, such as the EU diversifying its trade somewhat away from the United States to other markets. And those could include Canada, for example, because we have a free trade agreement with the EU, but they could also include Asian or African or South American countries.
And this is definitely something, we've seen some efforts after the announcement of the tariffs by the US, of the European Union trying to reach out. You mentioned Germany. What role does Germany's stagnation, the economic stagnation, and Europe's largest economy at that, play in the outlook for neighboring CEE countries? Are we looking at some sort of a spillover effect? Because you mentioned that Poland, because of its diversified portfolio, happens to be in a better position. What about other CEE countries?
I think that Germany's slower performance certainly will have an impact on CEE countries, and including Poland. The question is, how big will that be? Again, it depends what Germany will do to counter, for example, US tariffs. There just may be an effect that the tariffs are absorbed by consumers. We need to remember also that tariffs are on the import, are calculated on the import price of products, whereas the retail price is still a lot higher. So there's always a bit of room to maneuver. Other opportunities may include China, but again, the Chinese products that compete with Germany, such as cars, are actually very competitive compared to German ones at the moment, especially in the electric vehicle.
And you see a lot of electric vehicles from China all across Europe.
And I think you will continue to see China being very interested in exporting those to Europe. Now, Europe will have to decide, will it allow more cheaper goods in from China, or will it put up more protectionist measures, as it has in the past, to protect the German auto industry, on which CEE and other countries depend. So it's a very complicated thing.
It's a very complicated issue. There are so many moving elements that could potentially affect the European economy.
And a lot of things wait to be seen because of that.
Yes, indeed. So from your perspective, what is your outlook for recovery? What would have to happen in 2026 and beyond for that growth to be more balanced and for the global economy to bounce back?
Certainly to try to minimize the effects of tariffs and other measures that could lessen trade. I think looking for new areas where trade could go, where tariffs prevent it going to traditional routes. So I think a combination of lessening those tariffs through negotiations and fair play, finding new markets, and also as usual being innovative and seeing what domestic markets can absorb and how economic relationships and trends can be modified to be in line with the new realities.
New realities, indeed. In the world of global economy, this is a very interesting and a very busy time for all of us. Thank you so much, Bernhard Otterstein, President at the Polish-Canadian Chamber of Commerce. It was great to have you in the studio.
Thank you, my pleasure.
And so this would be all for now here on World Talks, but please do stay tuned. We're back in just a moment with more news and features.